Hey everyone, Michael Workman here with this week's Resin Market Moves powered by the Resin Smart team. Today is November 15th. I just got back from the AMI Plastics Expo event in Cleveland, and a lot of really good conversations there. It was great to see some familiar faces and meet some new folks. A lot of the similar stories that we've been talking about for the last few weeks. Weak demand, heavy inventory on the resin side, and defensive price increase attempts that simply don't hold up to the data right now. I want to start with three big takeaways from the show and then get into some of the resin market overview. First, demand is steady but slow. We talked to many manufacturers, compounders, told me order books across automotive, appliance, electronics, and consumer goods are still relatively soft and in some cases starting to slip further. We have seen polyethylene demand decrease by 2%, PVC by over 2% in the last few months, and ABS, polycarbonate, nylon seen sluggish downstream pull. Secondly, margin pressure is everywhere. Suppliers at the show admitted they're discounting a price to move volume. We're seeing examples of that in the market with price increases not sticking. Polyethylene up 3 cents with no support, and ABS and polycarbonate producers testing 10 cents with relatively little to no buy-in. A classic year-end destocking behavior. It's just in one of the weaker cycles in the last few years. And lastly, the buyers are showing up to negotiations prepared, benchmarking themselves, fair market ranges. It's another big part of why price increases aren't sticking. It's data doesn't support them. In polyethylene, we did get some government data in. There was a pretty substantial draw in October of 410 million pounds. But it's important to keep into perspective that polyethylene market is still long year over year. A very weak on the demand side right now, and lower ethylene feedstock costs coupled with global competition mean margin erosion continues in PE. No legs for increases to stand on. Polypropylene continues to be weighted down by PGP, which is hovering around the 25-cent marker, and no margin expansion efforts can survive in this current cycle. Inventories just under 2 billion pounds, operating rates at 75%. It's a buyer's market in polypropylene. Polystyrene's down a couple of cents and heading lower, really related to feedstocks, butadiene and benzene. Falling. ABS and polycarbonate oversupplied, as we've mentioned. Weak automotive markets are really what's driving that, and no support for those increases that are out there for November. PVC down again, no increases for November. Housing market is still soft and inventories remain high. In the nylon world, stable to lower with weak retail, automotive, and construction end markets pulling that market down. And then lastly, PET. Now, tariff noise is starting to fade. Fundamentals just are very soft with ample domestic supply and lower paraxylene and PTA costs. So wrapping it up, what does this all mean? We are in the middle of one of the more buyer-friendly quarters we've seen in years. The market is long and demand is slow, and every resin family is under some sort of pressure on price. If you're negotiating, this is your moment for 2026 if you're a processor. Resin Smart gives you the data to back up your asks, fair market benchmarks, feedstock, should cost models, and trend visualizations that help turn a buyer's gut feel into a story ready for the negotiation table. Check us out at resinsmart.ai. Start your free trial today, and I'll see you next week for another Resin Market Moves. Have a great rest of your weekend. Take care.